Do you remember that feeling? The one where you have a brilliant idea, a burning passion to start or grow a business, but then reality hits. You need capital. And with that need comes the inevitable question, often whispered with a hint of dread. What about my credit score? It's a question that can send shivers down the spine of even the most confident entrepreneur. We're told endlessly how important credit scores are, but when it comes to business lending, especially with a specific lender like Newtek, the information can feel a bit like searching for a needle in a haystack. There are so many variables, so many conflicting pieces of advice. Do they look at your personal credit, your business credit, or both? How long do you need to have been in business? What if you're a startup? These are all valid concerns that can make the process feel overwhelming. Many aspiring business owners get stuck at this hurdle, fearing their credit isn't good enough or that they don't meet some hidden criteria. But here's the good news. While credit score is undoubtedly a factor, it's often not the only factor, and sometimes the requirements might be more accessible than you think. Understanding the nuances, especially with a lender like Newtek that specializes in small business financing, can be the key to unlocking the funding you need. So let's cut through the noise and dive into the specifics. What credit score do you really need for Newtek? Newtek, now known as Newtek One, is a significant player in the small business lending landscape, particularly known for its focus on SBA, Small Business Administration, loans. This is important because SBA loans often have slightly different criteria than traditional bank loans. For startups, Newtek One generally looks for a minimum personal credit score of around 700. This signals strong financial responsibility, which is crucial when a new business doesn't have an extensive operational history or business credit built up yet. Along with this, startups will also typically need to provide collateral. For existing businesses, the picture can be a bit more flexible. While a higher credit score is always beneficial for securing the best terms and rates, Newtek has been noted to consider businesses with personal credit scores in the 650-700 range, especially for certain loan types. For example, for an SBA 7A loan, some reports indicate that a personal credit score of at least 660 is often a baseline. However, the longer you've been in business and the stronger your revenue, the more flexibility there might be on the credit score front. For owners with high credit scores, 700 plus FICO, you might only need 12 months of operating history. If your score is in the 670 plus range, 2 years might be required, and for a 660 plus score, you might need at least 3 years in business to qualify. It's also crucial to understand that Newtek considers more than just your personal credit score. They will also look at your business's financial health, including its revenue, often a minimum of $50,000 annually for SBA 7A, working capital loans, years in business, typically at least 1 to 2 years, with some sources stating 2 to 3 years, and repayment ability from earnings. Collateral, especially for larger term loans and lines of credit, can also play a significant role. Newtek frequently requires collateral in the form of accounts receivable or inventory for secured lines of credit. While Newtek might not always publicly disclose exact minimum credit scores for all its products, the consensus points to a strong emphasis on good personal credit, especially for newer businesses. Their role as an SBA preferred lender means they adhere to SBA guidelines, which emphasize creditworthiness without setting a single, rigid minimum score. Instead, they look at the holistic financial picture of the business and its owners. The best approach when considering Newtek is to ensure your personal credit is as strong as possible. Pay your bills on time, keep your credit utilization low, and regularly monitor your credit report for any errors. Beyond that, focus on building a robust business plan, maintaining clear financial records, and demonstrating consistent revenue. These elements, combined with a respectable credit score, will significantly improve your chances of securing the funding you need. With that said, thanks for watching, and until next time.